Hey everybody, this is Osprey from MyChartCoach.com, and in this video we're going to take a look at the indexes, and we're going to look at volatility and a couple of ETFs just to show you where the markets are at right now. So yeah, this is a crucial level for the stock market. Okay, a lot is riding on tomorrow, in my opinion. We do have the jobs numbers and the wage numbers are coming out tomorrow at 8:30 Eastern Standard Time tomorrow morning, and so that's going to be an hour before the market opens, and so we're going to get a view as to whether or not inflation is rising. And so yeah, this is going to be a big day. And so first up, let's look at the Dow Jones Industrial Average. And so as you can see here, it's struggling with the dotted purple line, which is the middle Bollinger Band, currently at 24,869. And so it did close just above that level today. Notice how it's below the orange line. If you could see, if this breaks out above 25,000, that's going to be your clear signal. Okay, yeah, the Dow Jones Industrial Average wants to head higher. And then we'll be looking for a run up to the 50-day simple moving average at 25,284. Now, if you see that 2486 level turn into resistance, if you see it trade below 24,800, that's going to be a red flag. And then that's going to put the 100-day simple moving average at 24,528 on deck. Right now it's at the 50-yard line. It could literally go any way. It's in the middle of the chart. The middle Bollinger Band is the top of the bearish lower Bollinger Band channel, and then the middle Bollinger Band is the bottom of the bullish upper Bollinger Band channel. So it's literally the 50-yard line for the way that we for our theory for technical analysis. So it could literally go either way here. I mean, it couldn't have closed any more on the 50-yard line. And so tomorrow, a break above 25 signals in play for a bull move. A drop below 24.8 signals in play for a bear move. Okay, and now let's look at SPXX. SPX. I'm sorry. This is the S&P 500 Large Cap Index, and so it's at a crucial level as well today. Notice it's hitting the green line. That is the 50-day simple moving average. It closed right at resistance, and so this is going to be really easy going forward. Above 2739, basically 2740, is going to signal that the S&P 500 is in play for a bullish move to the upside, and then we'll be looking for a run up to this previous high close on the 26th. That will be the target at around the 2780 level. And then if it fails to break that 50-day simple moving average and you see it drop below EMAs 4, 8, and 13, if you see it trading below 2720, that's going to be a red flag, and that's going to put that middle Bollinger Band there at 2703 on deck. If it drops below 27, that's going to be your big red flag that the bears are in control, and then we'll be looking for a drop down to 2673. Okay, so let's look at SPY. This is the Spider S&P 500. So it closed above the 50-day simple moving average today. So it had a better move than the SPX, than the actual index. And so going forward, if it can stay above the green line, above 273.54, that's going to signal it wants to head higher. If you see it drop below that level, that's going to be a red flag signaling its resistance. It closed above, now it has to hold that level. It'll be a red flag if it can't stay above. That would put the 270 middle Bollinger Band on deck. If it does hold, then you're looking for a run back up to this closing price on the 26th, which would put it up here at 277. So that to the upside above, this 273.50, 274 and above puts it to a possible run up to 278. If it drops below 273.50, then you're looking for a possible pullback to 270 to test that middle Bollinger Band. Okay, let's look at the Russell 2000. Okay, this is ticker symbol IWM. Now it took a breather today. It had been on a really nice 4-day run. The chart is still strong. It's still holding EMA 4 at 155.50. As long as the pink line is holding, the uptrend is still super bullish. If you see it close below, that'll signal it's cooling down, and then you could see the green line tested. That's the 50-day simple moving average at 154. It needs to stay above 154. A drop below 154 would be your big red flag, and that would put the 100-day simple moving average and middle Bollinger Band down there at basically 152 on deck. Okay, so a red candle formed today, but not a bearish reversal pattern. This looks like a pause currently in the uptrend. All right, as long as the EMA4 is holding, the uptrend should continue. This is trying to work its way back to previous levels. Notice it's hitting resistance from the first trading day in February. So it's it's hitting this top here. If it can bust through 157, then you're looking for a retrace up to 160, that closing price on the 23rd. Okay, let's look at the Nasdaq 100. So the Nasdaq has been super strong, even though there's been so much turmoil in the markets this week. I mean, look at the week the Nasdaq had. I mean, up 5 days in a row. It's by far been the strongest index. It's been the way to go. I mean, it just keeps pushing. There was so much bad news this week, and it just seemed like it couldn't get any worse. And everything got flipped around. I mean, tariffs were good news today. The markets rallied on a tariff. I mean, come on. I mean, what's bad is good right now, and so we'll see tomorrow with the jobs number if what is good turns out to be bad. Okay, because everything bad right now has been good for the markets, especially for the Nasdaq, because it's just been running like crazy. Right now, the big level to break once again is that closing price on the 26th. They're all retracing back to that level, the ones that have broken out higher, and so basically that's the huge level. If it can get above that, then you're looking at this close at 7,025 from back here in January. So this is going to be a crucial level on the charts. The pink line has been holding. If it drops below 69.23, that's going to be your big signal it's cooling down, and it could pull back to retest that middle Bollinger Band and 50-day simple moving average, similar to this move back here at the end of February. Okay, let's look at the volatility index. This is ticker symbol VIX. Okay, so this is an interesting spot on the charts. Notice that it's pulled back 5 days in a row. So much, that in my opinion, which obviously doesn't mean much, but it's just very interesting because I was thinking that there would be more volatility with so much uncertainty going on right now. There's just so much, craziness with people resigning in the White House. You've got marital affair problems going on. You've got, nuclear, a whole bunch of stuff that could rattle the markets. And look at volatility down 5 days in a row. I mean, who would have guessed that it would pull back 5 days in a row with all the stuff that was going on this week? So a lot of people got burned playing volatility. Right now, it's hitting the crucial level on the charts. It's hitting that 50-day simple moving average at 1629. And so if that level can hold, that's going to be the bounce level. This is the crucial level. If you see the volatility index drop below 1629, that's going to be a major red flag. That would be the signal that, like, okay, this is really going to be gearing up for a bull market, because that would drop volatility all the way down to 1330, and that would be the levels before the big spike. And so it's basically has to hold here if you're bullish on volatility. This is the must-hold level. If it does, then you're looking for a retrace back up to 20. So keep an eye out for a bullish reversal pattern forming off of this level. Okay, let's look at VXX here. Okay, so this had a pullback as well. Notice how it tried to bounce on Tuesday, and so it did form the green candle. It's been down 2 days in a row. It's hitting the 200-day simple moving average at 40. This is another crucial support level. Notice how it held on the previous pullback. It did drop below briefly, but got back above. This is the bottom of this channel, and so if it can get back above, you're looking for a retrace back up to 44.50. If it drops below 40.50, that's going to be a big red flag, and that's when you could see a VXX drop all the way down to the 30s. The next major support level is going to be that 50-day simple moving average way down at 35. So it's crucial that it holds 40.50. If it doesn't, you could see a $5 drop. Okay, let's look at UVXY. This is another way to play volatility, and you can trade options with UVXY, and it had this big pullback. It's below EMA's 4 and 8. It tried to get above the middle Bollinger Band, and it couldn't. That was a red flag with all this bad news that it can't get cooking. And so just very interesting indeed. If it keeps heading in this trajectory, the 50-day simple moving average and 100-day simple moving average will be on deck. That 1350 to 14 support zone. If you see it trading back above 17, that's going to be your signal. Okay, yeah, this is really back in play, and then you could be looking for a move back up to that 18 level and the middle Bollinger Band. Okay, let's look at TVIX. Okay, so this had the pullback as well. It got above the middle Bollinger Band, last week, and it looked like it was going to get moving, and then it pulled back again. It seemed like with all the stuff that was going on in the markets and in the world, that volatility would increase a little bit, but it didn't. It cooled down. They took risk off, and even though they were buying small caps, so they were taking a lot of risk. Volatility, even though there was super craziness in the world, just so much going on, but volatility kept dropping. It's pretty wild. I mean, maybe I'm the only one that thinks that, but yeah, it just seems this is the opposite of what you would think would have happened, with this chain of events, and somehow tariffs turn into be good news, because we didn't put tariffs on Canada and Mexico, and so basically, if it can hold this 50 and 100-day simple moving average, this is the bounce zone. If you see it trading back above EMA 13 at 835, that's going to be your clue. It's heating back up. So above 835 would be bullish. That would send it back up to 9. It has to get back above 9 in that middle Bollinger Band to get a new uptrend going. This is where it should bounce off. It should get a technical bounce like it did last time. It's set up for it. We'll just have to see how those numbers come in. And then it's not only how the numbers come in, but then how does the market react to the numbers? That's been the big mystery, is how is it going to play out? Is it going to be good news? Is good news going to be bad news, or is bad news going to be good news? We'll just have to see. Okay, let's look at EDC here to take a look at a couple of ETFs here to give you. This is the emerging markets bull. Okay, so a lot of people are hot on emerging markets. And you can say it's similar to the Dow Jones Industrial Average. It's right at the middle Bollinger Band. It's right at the 50-yard line. It's halfway to the upper Bollinger Band and halfway to the lower Bollinger Band. It's in the middle. It could go either way here. A break below the 132 level signals downside risk, and you're looking at a drop down to the 100-day simple moving average at 127. If it can break above this 134 level, then you're looking at a run up to the 50-day simple moving average at 139. It could literally, it's a crapshoot. It could go literally either way here. It couldn't have closed more, in this 50-yard line zone. And so the charts are just telling you indecision. Look how a doji formed. It's a very tight trading range. Nobody, I think nobody really knows which way this is going to head. Everybody's indecisive right now. You can see that this is on a 5-day run. Is it going to, go like it did over here in December and January and bust out on like an 8 or 9-day run, or is it going to finally take a breather? Okay, let's look at FAS. This is the financial bull 3 times, and so look at the similar setup as SPX, as the S&P 500. It's right at the 50-day simple moving average. I mean, it's just like the SPX chart, right at the 50-yard line. I mean, EDC right at the middle Bollinger Band. Dow Jones Industrial Average, right? The charts look exactly the same, right? This is the computer algorithmic trading programs. We do not know which way the program, which way the machine is going to take us. Well, we'll have a clue. If FAS trades above 72, that's your signal. Okay, yeah, the machines are taking us higher, and because the machines are in control, and so that would put this closing price on the 26 on deck. If 72 turns into resistance, and especially if you see it drop below 70, if you see it drop below 71, that's going to be your red flag, okay? And then if it gets below 70, that's going to be, okay, yeah, this is really pulling back, and it has to hold that middle Bollinger Band at 69. Below 69 would send it down to that 100-day simple moving average for another test like it did back here at the 1st of March, down at 67. So once again, this could go either way. A break above resistance signals it wants to head higher. Fail to break resistance signals a temporary top after a multi-day run. Okay, thank you very much for viewing this video. It's going to be a really interesting day tomorrow. I recommend you come check out our chat. We're going to be in there pre-market discussing everything. We'll be analyzing the data. We'll be looking at the charts. We'll be getting prepared for the day. So if you want to come in, come send me a direct message. And if you'd like to check out a free trial, I'll give you a pass. And yeah, you can check it out. Okay, so I'll post the link below the video. Thank you.